Good morning and welcome to Trading the Trend on Wednesday, the 7th of December. Last week we went long BP and it did so at 497 pence and expected the share price to continue to rise. It had already risen by 40% this year, and it did rise to levels seen last in 2006. If I go into our quarter chart, so each of these candles represents a quarter. You can see here that we rose back to levels last seen in April of 2006. But as the oil price faltered over the last few days and Brent crude oil fell below the psychological $80 mark, the share price of BP also dropped. So we have our stop loss in place, and it is below the last reactive low here from the 21st of November. It's placed just 1 pence below the low there at 457p. So basically our trend is still intact. The trend line is being tested on BP. We were long at 497 pence and we've got a stop loss at 456 pence in place there. Now moving on to today's Trading the Trend. Basically we would like to go short Bellway. Bellway is one of the largest UK house builders, and we expect house prices in the UK and also house price growth to slow in 2023. And therefore, we would like to go short Bellway at current levels at 1,929 pence on this daily financial bet, and place a stop loss above the last reactive highs here at 2,025 pence, with a downside target of 1,600 pence. And the reason is that if you look at the share price from a longer term perspective, you can see here on the monthly chart that we have been falling on this Bellway share price since April of 2021. We've bounced off the 200-month moving average, but the downtrend is still very much intact, and we expect it to continue in the days and weeks ahead. So today's Trading the Trend is to go short Bellway on the daily financial bet at 1,929 pence, with a stop loss at 2,025 pence and a downside target at 1,600 pence.